Bitcoin reacting to some of our levels of interest here. But is this main reaction here going to be a retrace to continuation, or is it going to be a rejection? Let's dive in and talk about it. So last week we were watching for this potential move up, this bounce on Friday from 2 weeks ago to give us a retrace so we could get a possible entry. And we were watching these levels of interest here for some kind of reaction to see if we could break above it and flip it into support. So after we got that initial move up, we did get a retrace into this level of interest here, and we have a reaction off of it. If you want to see further about my bigger picture ideas of what's going on here, definitely check out my last video. Since you can tell I'm a little ill, I'm going to keep this one nice and short and not rehash too much. But for right now, things are looking pretty good. Let's dive in and talk about this at a lower degree here. So just a quick recap on what we were looking for last week. We felt pretty good that we had a potential impulsive or motive move up from that Friday bounce. We weren't looking to buy into the FOMO. We were looking for the retrace that would follow to look for a potential ABC or a potential 1, 2, 3 here. And again, I went over that it doesn't really matter if we're bullish or bearish in the long term or whatever. We're really looking for a nice trade setup here that was internal to this impulsive range, directed to an area of interest, preferably within between the 50 and 618, the algo zone here. And then we look and watch how the PA kind of corrected in this area or moved to this area. If it looked corrective, there's a possibility we would consider that we'd get a reaction out of this area here. If we ended up breaking up high, coming down nice and swift, things would be a little bit sus, because then we could conclude that there's a possibility that the trend wants to continue lower, break this impulsive range low here. So we actually take this over to the PA to see that we ended up having it play out just as we ideally would like to see. We did end up popping up a little bit higher here, and then we have a correction here that moved nice and correctively into our area of interest here between the 50 and 618. We have a nice impulsive motive move up and away from there. That breaks the structure here. That would let us know that this potential move down here is done. Now, just because we have a potentially impulsive move to the upside, that doesn't mean that's exactly where we're going to go. I know a lot of people are going to see this green and say all-time high over and over again, as they do with every green candle. But for right now, we still have to see how this progresses, because in the larger degree count, as we'll go over here in a little bit, this could be an A or this could be a 1. We don't know quite yet. And it's all going to be on how this section plays out, as it did last week, to see how this whole section plays out. Right now, things are looking good to have us go up and break this high here at minimum. Typically in ABCs or zigzags, I should say, we're looking for at least a break of this high. Zigzags can truncate, but it's pretty rare. So we're 9 times out of 10, we're going to be looking for the high of the initial motive move or that primary actionary wave. That end of that will break with the second actionary wave. And how it breaks, is it going to break all complex, like in an ABC or a zigzag? Or are we going to shoot up, like in a wave 3? Again, if we're traders, we don't care. Right now, it seems that the directional move right here is pointing to the upside, the motive move. So we have to look into that, and this gives us something that we can build a trade plan around. Now, I do have a video and a ideal trade entry chart on X that I'll share at the end here that kind of goes over what I look for a potential trade setup or for an ideal entry model. And so far, these are shooting off some flares here that we should keep an eye on what's going on and potentially set up a trade plan. There's multiple things, even on the conservative side. The primary aggro side is that we were looking for an impulsive move or a motive move up, and then a correction into an AOI. And this would be the most aggro you could get as far as entry goes. When price comes down to an AOI, you automatically just buy down here, expecting the AOI to give a reaction in the direction you want it to go. Of course, we could always have just roll over and then nullifying that AOI. It happens all the time. There's no guarantee that an AOI is going to produce something like this. And the more conservative trader is going to wait for some kind of reaction and then a retrace to that reaction. And that gives us a smaller area to look for an invalidation. So this would be a second entry here. So instead of having a larger degree entry at this degree, where we have the invalidation a little bit further away, we now have a second entry here that invalidates at this point. If this is an impulsive move up and we get an internal correction, there's no reason that this should break, and then we'll get continuation. So right now we're at a pretty exciting stage of a possible trade setup. We have a motive move up that corrected internally to an area of interest, and we got a reaction out of it that looks motive at the moment, and we'll go over that in a little bit. That breaks structure of the previous move here, that potentially signals that this move down here at this degree at least has completed, and that we're looking for a larger move to the upside, or a larger minimum, a larger retrace to the internal of this move. So overall, everything played out as to what we were looking for, in my opinion. What this is, we'll dig a little bit deeper into the possibilities of what all this stuff could be and possible invalidation points. But this is the main thing you want to look for when you're looking for a trade setup, in my opinion. This is what I look for, at least, is we're looking for a motive move up, internal correction to an area of interest, reaction out of area of interest, possible trade entry. That's what I'm looking for now, and it's checking all the boxes at this point. Checking all the boxes doesn't guarantee you're going to get the outcome you desire, but we're looking for probabilities. We're not looking for guarantees. If we were guaranteed anything, we'd all be rich already. So exciting times, but let's go ahead and dig down into the accounts and variations of what we really think. First thing I wanted to do here was take a look at the larger degree. I went over this a lot more in depth in my last video. I'm sorry to keep referring you to that, but I would go check that out if you want to see kind of my thought process on this count for this move on the bullish side. So again, this is the bullish side here. If we do end up completing here and breaking all these levels and coming up and doing all this great stuff, these would be the two counts I kind of lean on at the moment. But we still have a lot of proving to be done by the bulls. Again, we have some offsets here that are questionable, and we have some proportion issues that don't quite line up for an ideal structure. Anytime a structure is not ideal, for me, it's always sus, and I have to consider other options. That's just me, maybe. Right now, this isn't the most ideal move down by any means. I think there's some proportional issues, some degree issues potentially as well. But right now on the bullish side, this is what I'm seeing. If we end up completing here, blasting off, breaking a lot of these pivots, this is what I would leave labeled cemented on my chart for now. On the bearish side, at this larger degree, again, I think my counts still remain the same on this as well. I think ideally we have a nice looking double zigzag here, and we're still putting in the B wave of the secondary zigzag here with one more down coming and breaking this level, potentially down to the 50-45 area. It's all based on kind of this move here. Are we going to get a larger retrace up to this level that kind of nullifies this potential impulse in progress as well? That's another bearish count we still have to look at deeper down. But at this time frame, if this is the completion of this initial move down here, and that we're putting in a retrace that offsets this PA move that printed here, there's a possibility for some more move downs. Again, we're always looking for the direction that the market wants, and if we're getting swift moves in one direction, we might want to consider that everything's going to continue moving in that direction until we get a swift move in the opposite direction. So if we do end up in a correction here, again, it doesn't necessarily mean that we're going to get continuation to the downside, but antennas have to go up and the eyebrows have to be raised here, that this is just some kind of correction that we're going to roll over for a lower low, breaking this level here at 60K that we had. So these are the two bearish counts right now. There's ideally, to make everything look nice and pretty and clear in Elliott Wave, I think we would have one more internal retracement here. An ideal area for a X wave is between the 382 and the 50. So again, if this does finish as some kind of corrective zigzag here or some kind of corrective move, there's a potential that we could just roll over here and continue down for one more low, completing the larger degree double zigzag down in a pretty fashion, ideal fashion. This still could be an impulse in motion here because we don't have some waves offset directly or in a pretty fashion. So we have 1, 2, 3, 4, 5 here, 2, and then we have another move here that looks like a completed third wave. And then we're considering this could be a fourth wave before we get one more move down. So when we're looking at the EWO, this is typically what we're looking for in a impulsive move. We're going to get a little hump there, retrace to the 0 line for the 1, larger momentum, and a retrace to the 0 line for the 3, and then another little hump like this one for the 5th wave to show that momentum has changed and we're getting some divergence here on the oscillator or indicator, divergence between the oscillator and the PA that's being printed. So one more low here, and then we would get some divergence here because this would only come down like this. And that would show that momentum has changed and that we're looking for a directional change. So that would be the prettiest kind of setup. Again, markets are messy. They're not always pretty. And it's all based on how we move from here. Now let's go ahead and dive into the lower time frame there. So in the last video, I kind of left you with this trade setup or this idea on what we were really looking for after we got this initial move up on last Friday, or on the 5th, I think it was. We were looking for this to complete as a mode of move up, and then we were looking for an internal retracement to an area of interest, and then this would be our trade setup idea. Now, if you're more of an aggressive trader, again, it's all dependent on your rules and everything. An aggressive entry would be entering in on an AOI right here. This would be the no-brainer for the Elliott Wave, that if we think this is a mode of wave of some sort, this would be our invalidation point. You can see the separation that we have between risk and reward. The reward is definitely a lot more that we have the internal retracement now. We weren't buying the into the FOMO and all that stuff on that Friday back here. And then we got an internal retracement. We would reduce the risk and we would get a little bit more reward, and it's not always the best if you're looking for a C wave. That's all dependent on where you would put your stop loss. Obviously, the further you put your stop loss away, the less your reward's going to be, or the less the RR is going to be. That's why the algo stop is a lot better, because it's a lot closer at the 65. But this was the dead wrong invalidation point here. And as you can see, it's quite a separation between the two. It's not great risk reward, whereas if you move this up here to like the algo 65 or 786, wherever you want to put it, that shrinks us down and that gets us at 3-1. The good thing about Elliott Wave and waiting for an algo stuff and just price action in general, there's always a second chance at a smaller degree, where if you think we're completed, you can shrink it down to a second entry or a smaller degree and get a lot better risk reward. So with that being said, we checked out this mode of move here. Now, if we consider this to be a mode of move in continuation of the trend at the smaller degree, which it looks good for, again, I think we have a corrective move down here, and I'll show you the count in a minute. We have an impulsive move up out of an area of interest, and we have a break of structure here, which is the key for me as when it comes to a conservative entry. This shows that we broke the lower high of the previous downtrend at this degree, and then we're looking for a potential retrace into that impulsive range before we get a continuation to move up at the larger degree even, if not the smaller degree. So if we get some kind of ABC up here for a flat or of some sort, doesn't matter at this point, based off of what we're looking at here, we have a potential to get in at a smaller degree to either catch the smaller degree retracement or to be part of the larger degree. And what this does here, if we think this is our second entry, we have an even tighter risk reward here. So we trick this down. Now, if we think this is a mode of move up, we would be wrong at this point. And this would be our dead wrong invalidation. And that would give us a lot greater risk reward, especially if we think this is still just the one wave of the C wave, let's say. We still have this as our larger degree invalidation. This is now our smaller degree invalidation. If we're looking for a larger move, we would still keep that same target. Taking profit is when you know you're in a profitable trade. So if we think this is just going to tweak above there, again, it's not going to be the best risk reward. But if we think it's a larger degree move, we can still keep those same targets, but now we just have a smaller entry and a larger risk reward with our invalidation a lot closer. This is an ideal setup here where we're looking for an internal retracement to this move. If we're wrong, again, we can reevaluate, and I'll go over a little bit of that in a second here. But we have smaller risk reward, smaller percentage between the point where we're wrong and a greater point of where we could be profitable and right in the trade up here. And this puts us at a 4-1. Just reaching for most likely target for a zigzag at this larger degree and having us have the invalidation here at the bottom of this potential impulsive move up. So again, when we get further down to this, if we end up retracing into here, that's what I'll be looking for right now, is a retracement into this zone. Again, just a smaller degree of what we were looking for here and continuation to the upside. Since this is an initial impulsive move here, again, there's a lot of variations as to what this could be part of. It could be primary reactionary wave of an impulse, of a zigzag. So we still have to consider where we want to take profit here. We do have some larger degree levels that we still have to keep in mind. As you can see, we try to push through this area several times and we rejected off of it. We did reject off of it in a corrective fashion, in my opinion, at the moment, but we'll go over that in a little bit. And then we got a bounce out of an area of interest on an internal retracement. So we still have a lot to do here for the bull side. We still have to break above this and either move way past it or break above it, correct to it, and get some continuation. So there's still a lot to be done. This would be the first kind of troubled area here where taking profit could be considered, but it all depends on your trade plans and how you set that all up. The other thing I wanted to go over, and I talked about it in the Discord here, it's all on how we react out of the area of interest. So we got the main move down here, and I posted this on Wednesday, I believe, or Thursday, when we got a reaction off of the 50. So I'm talking about this section right here. So we got a reaction off the 50 here, so why didn't we just rip up? And an aggressive trader would have taken that trade because we entered in to the 50 to 618 area. And if that's your part of your method is this area of interest here, like I said, an aggressive trader would have potentially bought right here at this pivot low. But it's all about how we bounce out of the area of interest as well. And obviously there's quite a bit of difference between these two things right here. We have a corrective move that looks like a zigzag coming out of this area. So that adds a little bit suspicion. And like I said in this Discord post here, we came up lazy to an area that has rejected and played as support in the past and resistance as well in a corrective fashion. So there's potential that it would just roll back over. And that's what happened after I posted this. We ended up dumping down. So if you'd like to become a member and check it out, I try to keep my posts pretty regular, at least every morning, do a little bit more in depth on what I'm looking at for the market. So if you're interested in that, I would definitely come check out the Discord. But back to this, again, it's all in how we react out of this area of interest. Bouncing out correctively, eyebrows could go up. Could have this been a 1-2, 1-2, and we could have been going up and out of here for sure. That was always a possibility, but we're really looking for moves like this that bounce up quickly, that breaks structure, and then we can start looking for that internal retracement to try and catch this move at this degree. The question we always have to ask ourselves when we see a motive wave or an impulse is this the direction that the market truly wants to go, or are we just sweeping liquidity here before we get a nice swift move down? This faked everyone out. Everyone jumps in, they all FOMO in, and then we get a dump and they all get crushed. That is a possibility at this point, in my opinion. Again, it's all about how we react and how the PA prints from here. So the main bullish consideration I'm looking at right now as far as count goes is that we're done at this point. We have a triple zigzag. I think we do have the right look here for a completed correction down and that we're getting an impulsive move up. Again, this count isn't the most ideal. I think correlations have a factor and things like that we have to consider. But again, this is one option. If we end up holding this internal retracement here and moving up, this is what I would leave printed on my chart at the moment. Again, there's other options. Elliott Wave's kind of, I don't want to say suggestive, but there is different options that we can look at. Now, this could be some kind of corrective move up here. This could be a zigzag of some sort. Also have this as an impulsive move up here, and then this whole thing is the correction as well. So right now, I'm just going to just lay this out and say this is the bullish outcome I'm looking for here, is that we have a completed motive move up. We have an internal retracement here, and then we're going to continue up in that direction. By stating that, then I don't really care what all this is. When it comes to trying projecting, I might need to know exactly where the pivot is that this motive move ended. But for right now, this is what I'm going to be leaning on. Again, if it changes, then I'll have to readjust. Just looking at this impulsive move here, one thing we have to consider when we see an impulse up here is what's it attached to? What's back here? So just looking at the naked chart in an impulsive move, and if we think this is done, do we think this is a primary reactionary wave for a continuation, or do we think this is a secondary reactionary wave of a correction that's going to face down? Now, there's a possibility in this situation, in my opinion, that we could be putting in some kind of flat here. So again, we could have some kind of complex correction going on here. I'd have to dig in and look for that in the count here. But anytime there's an impulsive move and we have some kind of correction to this backside, it's always a little bit sus. So nothing's a given in the market just because you have an impulsive move up and everything thing gets hype and X is pointing to all-time highs, doesn't necessarily mean that's the changeover in direction. It could just be part of a correction, and then we're getting some further down like that. I'm leaning on the more short-term bullish side, that this is an impulsive move up and we're going to get continuation of the upside. But as I was stating in my last video, again, there's a lot of correlation aspects that we have to consider. So that's the main idea I'm looking for here on Bitcoin. I think we could go back and forth on count a lot. I think we have the ingredients here for a nice trade plan setup. But as always in the markets, you can have the perfect ingredients to build a trade plan or bake the perfect tasty cake, but then the market can deliver you a shit sandwich. So let's hope the market's setting this up for a nice tasty cake here. It plays out to the upside. With that being said, I'm going to set up what I'm looking for and leave you with that. All right, just to start things off, as always, we want to look to the left and see if there's anything of interest to the left. I know this is a big mess right now, but I'll zoom in. I just want to point out here that all these lines and all this big area square here that I have marked off is all just basic pivots from back in the day. And something that I consider when I'm taking a trade is, of course, you want to look at the larger degree. You want to look left, as Sam says, kind of see if there's anything back here that could act as a troubled area or support resistance, all that kind of stuff. So that's where all these lines are going to come from, or that's where this box pretty much comes from, is just an area level that we want to consider that bulls have to break above and either move away from or correct to, like it did here, like I have it here. So at the daily here, again, these are some levels of interest that bulls kind of have to break. And this is going to come into our trade plan when we set it up, that these areas might play as resistance again and reject us. So this is the basic idea I'm looking for. We've hit some markers or checked some boxes here on my ideal trade setup that I have over on X underneath the pinned comment. So if you're interested in this, go check that out. I also do have a video on my channel about this whole thing that I walk through step by step on what I'm looking for. I'm already in a trade, to be honest, and I'm probably going to add more here. And the way it's set up, it's not going to break the bank. I don't have the house on it. I don't have my cars and my kids all on this trade. It's just going to be another trade that I'm looking for. So I'm looking for the second entry here. I think this is where we are right now, potentially. Again, we've come up in a mode of move, as I have it counted, and we've come down correctly, in my opinion, into an ideal range or an ideal entry area of interest. And then we have a reaction out of that in a mode of move that breaks structure. And then we have a return back for a possible second entry here, a more conservative one. If we're wrong on this entry, or if I'm wrong on this entry, it's a lot shorter distance before I'm invalid, instead of coming all the way back here to the primary main invalidation point of the larger degree. But again, this is basically what I'm looking for. I think we're at the second level entry here in this section. And I'm watching for a potential correction over the weekend that gets back into this area of interest again, retraces within before we get a continuation up. As with anything, the market's not going to listen to everything I say and do everything perfectly. We could have one more wave 4 up here and then come back down, and we just got to move the operation up until something comes into our area of interest, triggers some alarms, and we consider taking an entry. If we get 3 pivots, or we have a suspected 3 pivots in, we're going to put our pitchfork on, and we see we get some reactions here on the pitchfork outer parallel. If this is the final 3 pivots and I have it correctly, which I'm not saying I'm 100% correct every time. Again, if you think I'm dead wrong, you think the correction starts over here instead of over here, go for it. And if it turns out, then I'm happy for you. But right now, this is the area I'm looking for, as it plays for several points of confluence in my strat, at least. So we have a level of interest here that played as support and resistance. So I'm looking for that play as support again. Then we have the pitchfork here. We have another algo entry area here, and we have an internal retracement for an impulsive move based off Elliott Wave. So there's a lot in this box that I'm keeping an eye on. Doesn't have to reach this box, doesn't have to react in this box. Keeping an eye on this box right now. Now, the other good thing about this, having the pitchfork and the channel on here, is these are early warning signs that something's up if we end up breaking these. It's not a guarantee that if we break these, the trade's off, but these are early warning signs that you can alarm before the invalidation here, where you can consider, what's really going on. So if price comes down, breaks this channel motively, quickly, we might have to consider that, okay, this could be the C wave of some kind of corrective move over here, and then we're going to get a move down. Again, just early warning signs, nothing's a given. So if we do end up coming down here, again, I'll be watching the base channel as well. And then we'll see how we move up from there. So if this does end up panning out, further out, I'll be watching for how PA prints within this channel. Just going to take some of this off for some clarity. So on Monday morning, if this does play out, how are we going to act within this base channel that I have set up here? And that's going to guide me on what I think we're actually in. So if we end up coming down and rocketing up on Monday morning or something, or Sunday when futures opens, again, I would lean a little bit more toward this being a 1-2, possible 3, and that this is the 2 of the 3 right now. If we end up coming in here on Monday or over the weekend, and we end up coming up a little bit slowly and a little bit more lazily than just a rocket ship up, things are going to be a little bit sus that we're dealing with the C wave here. So we could come into a 1-2, 3, break above our levels here for the bears or for the bulls. The bulls have to break this level to add some further confidence in that the move is going up to some degree. We get a 1, 2, 3, 4, 5. And then we end here at the outer parallel of this channel. It's going to be sus that we're dealing with a zigzag move up to the upside. We're still within parallel lines. The secondary wave is a little more complex than the primary wave. So that's the kind of PA print that I'm looking for clues as to what's really going on. Again, this could be a 1-2, 1-2, and then we'd have to deal with it when we get over here. We look for how the PA prints over here. Dealing with the moment, again, is if we come down to this area and we get another reaction up, is it going to be a rocket or is it going to be a corrective completion of the larger degree? So that's what I'm looking for here at this lesser degree and what ideally I'd like to see in the next couple days. So those are my thoughts on Bitcoin for now, but as always, I'm just rolling with the waves as the price action prints. If you have any questions, thoughts, or a different perspective, drop a comment down below. I'll read them all. If you enjoy this kind of Elliott Wave analysis or breakdown, please give a like or a follow here, and please follow me over on X. I post a lot more over there. If you want to learn more, I would definitely recommend coming over to TradeDevils.com or Trade Devils University. This is where I primarily learned my technical analysis through a bear market in 2017, 2018. I'd highly recommend just coming and checking this out. Again, it is free. You can come check out the free Wipeout course here. There is some good basic information in there, like support resistances and stuff like that. If you like the information here and in this course, you can always move on to the blue and purple belts. And you can come check out our Discord as well. Again, if you join for free in the Discord, you get those Elliott Wave cheat sheets. But as always, trade safe, trade clarity. Take it easy. Later.